You ever have one of those zero DTE option strategies that on paper just looks incredible? You backtest it, you believe in it, but then when you go to trade with real money, your account just slowly, or maybe not so slowly, bleeds out. It is one of the most frustrating things in trading. Well, today we're going to pull back the curtain on the silent killer behind this, and I'll bet the reason is not what you think it is.
So let's just kick things off with a statement that probably goes against everything you've ever heard. Most zero DTE traders are not losing to the market. You know, it's so easy to blame bad timing or some crazy volatility spike or just plain old bad luck. But according to the source material we're looking at today, the real opponent, it isn't the market at all.
Exactly. If your trades are solid, but your P&L is shrinking, where is all the money going? Well, that's the big mystery we're going to crack today. And the answer is something that's been hiding in plain sight, just quietly siphoning money from your account on every single trade.
So the real culprit here is what our source calls the silent profit killer. And it's not just one thing. It's actually a whole collection of hidden costs and, frankly, structural flaws in the way you might be trading. This is the enemy you can't see on a price chart, but believe me, it is having a huge impact on your bottom line. Okay, so let's make this invisible enemy a little more visible. We all know about commissions and fees, right? That's the obvious stuff. But the real damage, it comes from the things we tend to ignore. You got slippage, that tiny difference between the price you think you're going to get and the price you actually get. Then there's the cost of constantly buying new protective options or wings for every spread. And maybe the biggest trap of all, closing trades for these tiny little profits where your costs can literally eat up the entire gain. See, each one is like a small leak, but when you put them all together, they can absolutely sink the ship. And this quote just hits the nail on the head. You could be a market genius calling every single move perfectly, but if your trading structure, your fees, your slippage, your execution habits, if that's fundamentally broken, you're set up to fail before the market even opens. You're beating yourself.
All right, enough talk. Let's move from theory to the cold, hard math of reality. Because, numbers don't lie. And this is where we're going to see exactly how a strategy that looks profitable can actually be a guaranteed loser.
So, just imagine we've got this zero DTE setup, okay? The win rate is a pretty solid 65%. When you win, you make $120. When you lose your full risk of $200. Now, be honest with yourself. You'd probably take this trade, wouldn't you? I mean, a strategy that wins almost 2/3 of the time? That looks pretty good on the surface.
Now, to figure out if this strategy is actually profitable over the long run, we need to calculate something called its expected value, or EV. To put it simply, EV tells you what you can expect to make or lose per trade on average if you took it hundreds of times. It's basically the math that proves whether you really have an edge or not. Okay, let's run the numbers. First step, the wins. We've got a 65% win rate, and we make $120 per win. That gives us an average gain of $78 for every trade we take. Now for the other side of the coin, the losses. Well, if we win 65% of the time, we lose the other 35%. And when we lose, it's a $200 loss. That works out to an average loss of $70 per trade.
So, what do? We take our $78 average gain, we subtract the $70 average loss, and there it is. A positive expected value of plus $8 per trade. This confirms it. On paper, before we factor in any of the real-world stuff, this is a winning strategy. It has a real, quantifiable edge.
So you should be profitable, right? Your account should be slowly ticking up $8 at a time. You've literally proven the strategy has an edge. But then, reality hits.
Remember all those silent killers we talked about? The fees, the slippage, buying the wings? Let's be super conservative here and say that for one round-trip trade, getting in and getting out, all those little costs add up to just $10. A single $10 bill. Seems pretty small, right?
And this, right here, is the moment of truth. On one side, you have your hard-won trading edge, a positive $8. But on the other side, you've got your unavoidable real-world cost, a negative $10. And here's the kicker. The cost is bigger than the edge.
So this is where the hammer drops. Your $8 edge minus your $10 in costs leaves you with a net result of negative $2. That means every single time you place a trade with your winning strategy, you are systematically, mathematically guaranteed to lose $2. Your edge hasn't just shrunk, it's been completely wiped out by your costs. This quote just perfectly captures the entire trap. You did all that work to develop an edge, to become the casino,
But because of these hidden costs in your structure, you've accidentally turned yourself into the gambler, sitting at a table where the house is guaranteed to win over time.
Okay, that was the bad news. I get it. But here's the good news. This is 100% fixable. It just requires a shift in where you put your focus. So let's look at how you can stop the bleeding and rebuild your trading foundation with what we're calling a professional's checklist.
All right, here are 6 steps to get your foundation solid. 1. Know your true win and loss in actual dollars, not just percentages or R multiples. 2. Figure out your total round-trip cost per trade and be brutally honest with yourself about it. 3. Stop taking trades for tiny little credits where your costs are bigger than your potential profit. 4. It's often way more efficient to trade fewer contracts with wider spreads than it is to spray dozens of small ones. 5. Look for ways to reuse your protective wings instead of buying fresh ones for every single trade. And finally, number 6, and this is the big one, constantly track your expected value and put it right up against your real costs. That's the only way you'll know for sure if you have a real edge.
You know, when you boil it all down, what this all comes down to is a really critical shift in mindset. It's about getting away from the amateur's endless search for some holy grail strategy, and instead adopting the professional's laser focus on building a solid, cost-effective structure.
And this right here is the fundamental difference. See, an amateur finds a strategy that stops working, and what do? They immediately go hunt for a new one. A pro asks why it stopped working. They fix the cost structure. They prove their edge is real after all the costs are factored in. And only then do they even think about scaling up.
So, I'm going to leave you with this final thought. The next time you feel like your strategy just isn't working, ask yourself this. Are you going to jump to the next shiny new thing you see online? Or are you ready to do the hard work of a professional? Pop open the hood and fix the hidden structural problems that are probably the real source of the trouble? The answer to that question could change absolutely everything for you.